So by way of introduction, I'd like to give you an update on the public finances, where we are at the moment, the progress on the rebalancing plan, deal with the tax and national insurance issues, and also give a summary of the major impacts on the government's services as a result of this budget. I'd just like to give you a bit of background information first. The first is the growth in the local economy is still strong. It's 4%. Unemployment is still relatively low at 2.6%, and this compares well with other jurisdictions. Inflation is stable at approximately 2.5%, and there's a stable level of banking deposits. It's down 5% this year, but a large part of that is represented by changes in currency movements. In sterling terms, our deposits are down by 1%. It's a very low interest rate environment, currently 0.5% Bank of England base rate, and the forecast is that it's likely to stay quite low, certainly for the next couple of years. External factors will still have an impact on us. The UK's economy is flatlining, and there's talk of it going into a triple dip recession, and we have to acknowledge that the UK is our biggest trading partner, and that inevitably will have some impact on us. Going on to our medium-term strategy, since 2009, just to remind you, we've lost £200 million per annum in customs receipts. And what we said we do, and what we are doing, and what we will do is we'll rebalance the budgets by 2015-16, and we're on course for that. We said that we'd use £92 million of our reserves to achieve that rebalancing. We now estimate it'll be £89 million. We forecast this time last year that there'd be a deficit of £55 million during this current year. We now expect it to be £47 million. There has been strong receipts in direct taxes, income tax. There was a £2 million also back payment for VAT from previous years, and the income on our reserves was £1.7 million higher than we expected. So overall, the income has been quite strong this year. Government spending has risen by 1.7%, but that is in real terms, when you compare it with inflation, a 1% fall. Employee costs have reduced. We've taken 400 posts out of the government headcount, and there's been 300 actual staff lost since the headcount peaked in 2010. Just to give you an idea, the fact that those 400 jobs have gone is a savings to government of £12 million a year. So, as I said at the outset, our spending reductions have been on plan. If I just illustrate that, the red line is where we thought our spending would go at the time of the 2009 budget, leading to 2014-15, just over 620 million. As has happened last year, we expected the green figures that we would move on a fairly flat line, and we're on course. Where we stand now, we're on course, and we expect that we will meet our targets in 2014-15. So how we achieved our plans, we are on plan to rebalance, and I can just say, I'll give you an illustration of how gradually the money's been taken out of the government spending. We've made it abundantly clear that we're not slash and burn. This is a phased reduction in our expenditure, and by the time we've finished the rebalancing, we expect that we'll take just over £100 million out of our spending. Of our spending reductions, staff costs have been a major part. 78% have been represented by our reduction in staff costs. We're currently saving approximately £52 million below inflation over staff costs, and if we hadn't have done anything, we would have been spending about £360 million in staffing costs as opposed to just over £300 million now, and our staffing costs are capped, and that's the important thing. So as a consequence of capping our staffing costs, the head count is coming down. As I said, it peaked just over 8,000 and we have reduced by 300 to date, and over the next 3 to 4 years we anticipate there'll be a further 100 job losses in that time. So we've done that without impacting on growth or, just as importantly, adding to unemployment. Unemployment is still fairly low at 2.6%. And I'll just give you an indication of the challenges we've had. 70% of our staffing is in frontline services. Education, 24%, health, 24%, social care, 14%, and home affairs, which is police and prison, 8%. So it doesn't give us much left to go for in the other 30%. So it's been a bit of a challenge. Now, I did say that we hadn't impacted on unemployment or growth, and if I could just ask you to have a look at the unemployment figures. This, I apologise, is a bit of a busy slide, but have a look at the unemployment. We're talking about the end of the calendar year. Ireland at that time was 2.3%, UK practically double, Jersey nearly 50% higher, Ireland over 3 times as much, and other jurisdictions substantially ahead of us. Our annual growth rates, we think that last year we were 3%, compared with the UK just flatlining. Jersey showed a decline, and that's the 3rd year that Jersey have shown a decline in their annual growth, whereas, as I say, we have continued to grow. So I don't think that we've got it all wrong, to be blunt with you. We've had a 3-pronged approach. It's not just balancing the budget, it's maintaining growth and also protecting the vulnerable. Now I'll just go on now to our current year forecasts. Comparing these with what we said this time last year in the budget. We forecast in the budget that our income would be £484 million. Our forecast is 693, a positive variance of 9 million. Our expenditure is on target. So instead of transferring £55 million from reserves, we anticipate that we need £47 million. So it's quite a positive picture. Future years, now this does give me some difficulty because we anticipate that next year we'll need to withdraw £31 million from reserves, which was the figure that we originally anticipated. In the budget this year, I anticipate that 2014-15 we'll need to pull £11 million back from reserves, and 15-16 will be back in balance. But the work will not be finished then. There'll still be more work to do after 15-16. And I did say it's getting increasingly difficult to forecast on the longer term basis. There's increased economic uncertainty with our trading partners, and it's also difficult to forecast the impact on these figures of the Vickers report, that's the reorganisation of banking in the UK, and also the FATCA, which is the Disclosure of Information Agreement with the UK and also the USA. So to move on to the individual department budgets. Now this year, unusually, we are delivering budgets for a 3-year cycle. The first year is in effect a firm budget. The second and third years are indicative budgets. Now you'll see that this has been a very difficult budget setting, but the biggest rises are Department of Social Care over the cycle 4.3, Department of Health over the cycle 4.7. The biggest reductions have been in Department of Community, Culture and Leisure, and economic development. Now, economic development are generating more income as they go along, so that figure is a bit misleading. So as they're generating more income, they don't need the same level of support from the centre. These budgets are stretching, they are demanding, and they will be difficult to deliver, and they'll require a certain amount of resolve, I have to say. We need to develop backbones because it isn't going to be easy to get this through. During the first year, we have devoted extra resources as well to education and children, and that is to help to defer the first year of the Student Awards Scheme, or the revised Student Awards Scheme, to give young people and their families a bit longer to plan. So that will give them a help, but we're not able to do that any further going out. It's, as I say, stretching budgets going forward. Benefit changes now. We anticipate that there'll be a £13 million increase in benefits. Part of that is the increasing age profile of the population, and also the increase in the retirement pension. The retirement pension will go up, the basic pension, to £110.15 a week, and the pension supplement will increase that to just under £164 per week. Some of the benefits have been increased by 1%, not by inflation. We didn't want the benefit system to become a disincentive to joining in the workforce, workplace, because I didn't think it was right that those who were on benefits got a bigger rise than those who were in employment, who arguably weren't getting a rise at all. There had to be some fairness to it. Child benefit has been left unchanged, and the nursing care contribution for the older people who are in nursing homes has gone up by £10 a week to £110. This is part of our aim to protect the vulnerable. Capital expenditure. We anticipate that during the current year we will deliver nearly 80%, in cash terms £65 million. Next year there's £97 million, excluding the local authorities. But in that 97 there's £35 million to repay the Manx Electricity Authority borrowing. £7 million for the sewerage system regional strategy, and within our overall figures there's £44 million for construction activity, including £19 million on the housing programme through the local housing programme. This local housing programme is especially labour intensive, and it's designed to help the construction industry at what I acknowledge is a very difficult time for them. Our reserves. Now this gives you an overall view of the impact of the rebalancing programme on our reserves. The green figure on the bottom here, that's the reserves which are externally managed, externally invested, and they've done very well under the able stewardship of Mr. Braidwood. They've gone up £100 million in the last year, which is twice the amount that we will now need to draw down from our reserves to balance the budget. So in fact our reserves are better now because of that increase in value. So the difficult thing is that our capital reserve, the purple one, is getting very tight towards the end of the rebalancing period, and that's why I said at the outset the work at the end of the rebalancing period will not be finished. We will still need to provide capital to fund our capital programme going forward. There's various internal operating funds as well. They're the red. They're, for example, the legal cost reserves, insurance reserves. There's various little reserves we have, and those are getting run down as well, so these will need to be replenished once we get to the end of the rebalancing period. Now what concerns us all, being taxpayers, or I hope we're all taxpayers, is the taxation and charges. Basically, there's no change. It's what you might call a steady Eddie budget. No change to any of the personal rates. The personal allowance credit, which is £500 per person for those who don't file income tax returns, and £1,000 for a married couple. The National Insurance Rebate Scheme for those companies and businesses which take on extra employees, I'm going to extend with Tynwell's agreement for a further year. That really has been a bit of a surprise to me. I thought it would do well, but I've been astounded by how well it's done. It's created just under 400 jobs where we stand now. In terms of lost national health insurance, it's only the employers who get in effect, a holiday on it, not the employees. So the employees pay, the employers don't. It costs just over £900,000 a year, but in terms of the tax and national health insurance that those people are paying us, those extra people in employment, we're getting £6 million a year from it. So it's very, very worthwhile doing. We're going to tax the most profitable retailers. Those retailers who are generating profits from their trading activities on the Isle of Man of more than £500,000 a year, they will be taxed on their entire profits at 10%. We think it's only fair, it's only right, because they are dependent upon the Isle of Man taxpayer to fund the cost of providing the infrastructure upon which they depend for their operations. So we think it's right that they should make a contribution towards the cost of that. Moving on, FATCA. This is the exchange of information agreements with the US and the UK. The negotiations are proceeding very well, and I expect to be in a position to sign formal agreements very, very soon. With the UK, substantive agreement has already been reached, and I want to pay tribute to Malcolm Couch and his colleagues. They've been working quite literally 7 days a week on that, and we've just had confirmation over the weekend that we are virtually there now. There's an Isle of Man disclosure facility which is similar to the one which was entered into with the UK and Liechtenstein. Now that basically means that anybody who has a problem with their UK tax affairs and wants to regularise them can use the agreement with the Isle of Man to do that with significantly reduced penalties. That'll be open until September 2016, and it'll give people a window of opportunity to deal with their tax affairs and to put them on a firm footing. Also, I hope to be able to sign that agreement tomorrow, first thing in the morning. There's also an intergovernmental agreement with the UK. It will clarify the position of those people who are UK residents but who are regarded as being non-domiciled, non-doms. We've virtually reached a form of words to clarify the position, and also to extending the double taxation agreement to include automatic exchange of tax information between our two countries. So it's been quite an intense period, but we're nearly there. Clouds on the horizon. There are various issues coming out of the second report on the scope of government. As I did mention before, rebuilding capital reserves. We need £30 million a year to put into the capital fund post 15-16, and also to remove reliance on internal funds. Some of the expenditure which is channeled through internal funds should by rights go through the revenue accounts. We need to finalise the VAT sharing agreement with the UK. We've agreed the basic formula, that's fine, but we're currently collecting data over the next 12 to 18 months, which will enable us to calculate the actual figures, the actual cash share that we'll get. So in other words, what do those percentages mean in cash terms? And we need to manage the impact of the FATCA report, the FATCA proposals, and also I did mention earlier the change in banking regulations in the UK, where they were going to, in effect, set up banks which were not too big to fail. So they're going to split off the retail bank, that's the sort of bank operations that we'd all have, from the so-called casino banks, the investment banking side of it. That could have an impact on the Isle of Man going forward. So there are challenges there. Certainly it's an interesting life, and it's not getting less interesting. So the main impacts over the next 3 years, tuition fees, we've already flagged that up. That's £3.4 million a year. If that goes through, that's what the impact on our benefits on our budgets will be. The higher waste charges, £3 million in total. We expect to achieve efficiency savings of £10 million in shared services and estates. I've been surprised how quickly that is delivering very tangible savings. And I feel now that over the 3-year cycle we will be able to take £10 million of savings out of the system. The proposal is that from next year there'll be means testing for child benefits. That will reduce the cost by between £2 and £3 million, and by increasing benefits at only 1%, that's saving about £3 million. But there's also an awful lot of work going on. We've been criticised as a government for not delivering now with respect. I don't think it's appreciated how many work streams we have in place at the moment. There's a full review of the benefit system, public sector housing, and also age-related entitlements. Now, there, for example, bus passes and eligibility because you've reached a certain age for free prescriptions, Mr. Moss. Anyway, in summary, we are on target. We are doing what we said we'd do last year. We've put the detailed budgets in place for the next 3 years, but as I said, 2015-16 isn't the end. We need to carry on. We've still got work to do. We're protecting the vulnerable. We've protected spending in health, social care, and we've avoided further tax rises for the man or woman in the street, as it were. The economy is still growing, and we expect it will grow, continue to grow, and we are continuing to promote economic growth. And as I said before, we are delivering on our promises.